Sukuk, the Islamic bonds. Sukuk, as an Islamic alternative of bonds, represents one's proportionate ownership in an asset or a pool of identified assets. However, trading of Murabaha and Salam-Based Sukuk is not permissible. Definition: Sukuk may be defined as when an ownership of the underlying assets is transferred to a large number of investors, this ownership is represented through certificates. These certificates are called Sukuk, and they represent a proportionate value of the relevant assets. Sukuk is sometimes referred to as Islamic bonds, and better described as Islamic investment certificates. Key advantages of Sukuk: they bring a new source of funds to Islamic borrowers, generally at attractive rates. They are vital to develop deeper and more liquid Islamic capital markets. And great surplus of cash in Islamic financial institutions may be tapped through Sukuk. Benefits and features of Sukuk. Capital gains. Capital gains are accumulated when bond prices rise as variable market indices fall. An asset-backed investment. Sukuk investment involves funding of trade or production of tangible assets because they're already linked with real sector activities. A tradable asset. They are Sharia-compliant capital market products, and they provide medium to long-term fixed or variable rates of return. Credit quality. Sukuk are rated and assessed by international rating agencies, which investors use as a guideline to find out their risk and return parameters. Regular periodic income. During the investment period, they are characterized by regular periodic income streams with easy settlement. Source of liquidity. An existence of a secondary market provides liquidity to Sukuk instruments.
AIMS is a globally recognized and an accredited institution. We offer certifications, diploma, MBA, and PhD programs in Islamic banking and finance through an online and self-paced learning system. For registration and details, please visit www.aims.education.
Applications of Sukuk. They may be designed and issued for government, corporate bodies, banking and financial institutions, or any entity that wants to mobilize its financial resources. Sukuk for government projects. Ijara-based Sukuk are effectively used to finance government projects. When a general public is involved in the construction of these projects, it gives them a sense of ownership. The effective usage of Sukuk increases the ratio of success and sustainability of the projects. Sukuk in the private sector. The corporate sector can benefit from unique characteristics of Sukuk. For example, Musharakah-Sukuk associates the general customer with the company. Sense of ownership and share in a company's profit can be used as marketing tools, especially when the company is dealing in customer goods. Legitimacy of Sukuk. A collection of assets can be represented in an Islamic bond, and this Islamic bond can be sold at a market price. However, the majority of assets must consist of physical assets, with a small portion of cash and debts. Understanding the conventional bonds. How Islamic bonds differ with conventional bonds. The Islamic bank doesn't contain any element of interest or gambling. The Islamic bond represents the ownership of the holder in the pooled assets. The holder of an Islamic bond earns income of return, which is generated through the asset. Classification of bonds. Coupon bond. A bond that pays its holder a specified amount of money at given dates until maturity. Discount bond. It is bought at a discount or a price less than its face value. Unlike coupon bonds, discount bonds pay the bearer only once at its expiry. Convertible bond. It gives its holder the right to convert or exchange the par amount of the bond for common shares of the issuer at some fixed ratio during a particular period. Extendable bond. It gives its holder the right to extend the initial maturity to a longer maturity date. Retractable bond. It gives its holder the right to advance the return of the principal to an earlier date than the original maturity. Foreign currency bond. It is issued in a currency other than its national currency. Issuers make advantage of international interest rate differentials. Corporate bond. It's a loan made by a corporation who gives specific interest for specified time, plus face value on the specified maturity date. High yield or junk bond. They are issued by companies whose credit rating is considered speculative grade or below investment grade. And inflation-linked bond. It provides protection against inflation, and their principal is increased by change in inflation over a period. Types of Sukuk and their application. Pure Ijara Sukuk. It is used for the assets that can be leased, for example, aircrafts, turbines, ships, etc. Hybrid or pooled Sukuk. Modes like Murabaha and Istesna are mixed with illiquid assets like Ijara and Diminishing Musharakah. Their return is linked with the performance of the underlying asset. For example, Musharakah Term Finance Certificates or MTFCs. Zero Coupon Non-Tradable Sukuk. These certificates are based on modes like Istesna, which are not readily tradable because assets do not exist. Embedded Sukuk. If any of the above-mentioned Sukuk is converted into other asset forms, such types of Islamic bonds are called embedded Sukuk. Issuance of Islamic bonds. The primary condition for the issuance of Islamic bonds is the existence of the assets. Usually there are three main stages to their issuance, and they are explained here. Stage 1. Securitization via BBA and Bai al-Ina. The first step is the creation of a Bai al-Ina underlying asset. The next step is their securitization. Since asset securitization is the essence of Islamic bond issues, so the bond must assume a property as an object of sale. Stage 2. Bond issuance via Bai al-Dain. It takes place in the primary market, where the issuing company sells its debt certificates or bonds to sell its debt to investors. As discussed earlier, debt certificates can be issued only if they are supported by assets, or in other words, bonds must be securitized. Here, the underlying security is BBA or Murabaha asset, but it is not necessary, and it depends on stage 1. If the first stage involves a contract of Ijara or Istesna instead of BBA, then the debt certificate will be Sukuk al-Ijara or Sukuk al-Istesna respectively. Stage 3. Trading of debt certificates. Almost all Islamic bonds are bought for long-term investment. Here is a Sharia view on bond trading in the secondary market. Since Bai al-Dain literally means debt trading, it refers to the exchange of a debt for a debt. Since this transaction involves the sale and purchase of securities or debt certificates, so it is prohibited in Sharia. The trading of Islamic bonds in the secondary market for liquidity is also crucial because there is a lack of secondary markets. Investment Sukuk. These are certificates of equal value, and they represent undivided shares in ownership of tangible assets or services, or ownership of assets of particular projects, or a special investment activity. Investment Sukuk are of the following types: certificates of ownership in leased assets, certificates of ownership of usufructs of existing assets, certificates of ownership of usufructs of described future assets, certificates of ownership of services of a specified party, certificate of ownership of described future services, and salam certificates. Structuring of several types of sukuk. The issuance of sukuk requires an exchange of asset through Sharia-compliant commercial contracts. Examples of such contracts are mudarabah, musharakah, ijara, istisna, salam, and Murabaha. Sukuk, which are based on the principles of equity-based mudarabah and musharakah, exposes investors to the risks. Sukuk, which are based on the principles of receivables, are ijara and Murabaha. Their result is predictable, and somewhat they give fixed returns. Ijara-based sukuk. These are the certificate of ownership of assets owned by a customer, and they are based on ijara. This is how it works. The company which needs to fund to purchase a land or equipment establishes a special purpose vehicle. The SPV issues Ijara-based Islamic bonds by dividing the required amount into small and equal denominations. The asset is then leased to the company, and the bonds are sold to the investors. The lease proceeds from the asset is distributed to investors as dividends. Case study: step-by-step structuring of Ijara-based sukuk. ABC Limited wishes to purchase a plant worth $5 million through Islamic sukuk. The company identifies the supplier of the plant and finalizes the negotiations. ABC Limited creates a special purpose vehicle or SPV as a limited liability company. The SPV issues 10,000 Ijara-based Islamic bonds, equaling each of $500. These 10,000 bonds are sold, and funds are collected from the investors, and the SPV purchases the plant. Now the investors or sukuk holders are the owner of the plant. SPV holds the plant as the trustee and leases the plant to ABC Limited as per Ijara. ABC Limited pays periodic rentals to the special purpose vehicle for tenors and amounts matching the coupon and tenor of the sukuk. ABC Limited gives the special purpose vehicle an irrevocable purchase undertaking to purchase the asset on maturity. In this case, exercise price equals initial purchase price of the asset plus the service costs. Upon payment of the exercise price, the asset is transferred back on maturity to the special purpose vehicle or sukuk holders. Diminishing Musharakah-based sukuk. These are the certificate of ownership of assets owned by a customer, and they are based on diminishing musharakah. Let us understand the mechanism and documents executed under this arrangement. Investment Agency Agreement. Through this agreement, all participating investors appoint a bank as the investment agent to carry out all actions in respect of sukuk issues. Asset Purchase Agreement. Through this agreement, the investment agent on behalf of the investors buys a fixed musharakah assets in partnership with the issuer at a price equivalent to the sukuk issue amount. Musharakah Agreement. The investment agent, on behalf of the investors and issuer, enters into a Musharakah agreement to jointly own the musharakah assets. Each investor's entitlement to the assets constitutes of sukuk units, and the share of each co-owner is specified in the agreement. Service Agency Agreement. As per this agreement, the issuer is appointed as a service agent. This agreement is signed between the issuer and the investment agent, where the investment agent acts on behalf of the investors. Payment Agreement. Through this agreement, the investment agent allows the issuer to use investors' share of the musharakah assets against periodical rental payments. Undertaking to purchase sukuk units. It is a promise undertaken by the issuer in favor of the investment agent to periodically purchase sukuk units. These units represent investors' undivided beneficial ownership in the musharakah assets and purchase of all outstanding investors' sukuk units in case of default. Undertaking to sell sukuk units. It is a promise undertaken by the investment agent in favor of the issuer. The investment agent grants a call option to the issuer to purchase all or part of the sukuk units. Trust Deed. It is executed between the trustee appointed by the investors for the sukuk issue and the issuer detailing the responsibilities of the trustee. letter of hypothecation, or other security documents. They are executed by the issuer in favor of the trustee for security purposes. Salam-based Sukuk. Salam allows the seller to make advance payment for goods, which are to be delivered later, provided that the goods are defined and their delivery date is fixed. The government of Bahrain first issued Salam-based Islamic bonds as an alternate to short-term government treasury bills. This is how it worked. Suppose a government takes an advance payment from the investors for a future delivery of goods, for example, crude oil at the rate of $50 per barrel. The government issues an acknowledgement of receipt to the investors called Salam Sukuk. At the time of completion of contract and upon the delivery of the crude oil, the government acts as an agent of investors and sells the crude oil to the refineries at the rate of $55 per barrel. The difference between the sale and purchase prices of the crude oil is the profit of the investors. However, these bonds cannot be traded in the secondary market. Murabaha Sukuk. They are issued against a Murabaha transaction, where the investors provide funding to the issuer to purchase some assets. Mechanism. Assets are purchased from the supplier, and they are immediately sold to the issuer on deferred payment. Profit earned from the transactions is distributed among the investor proportionately. However, they also cannot be traded in the secondary market. Musharakah Sukuk. They are widely used in project financing when the company requires funds from investors according to the rules of Musharakah. Every Sukuk would represent the holder's proportionate ownership in the Musharakah assets. Once the majority of the cash is converted into assets, these bonds can be treated as negotiable instruments in the secondary market. Features. Profit is shared according to the ratio agreed between the issuer and investors. Loss is shared on a pro rata basis. To ensure tradability, at least 20% of the value of the portfolio should be invested in non-liquid assets. It is used for several purposes, including construction of factories, expansion projects, and working capital finance. Other types of Islamic Sukuk. Islamic bonds are also issued for other modes of finance. However, the focus is given only to those modes in which usufruct is transferred and not the ownership of the asset. Other types include Muzara or sharecropping certificates, Mugarasa or agricultural certificates, and Musaka or irrigation certificates. Hybrid structures. Sukuk are also issued under hybrid structures, where multiple Islamic modes are used to issue a single Sukuk. However, while designing such a Sukuk, each of the Islamic modes is applied at a different interval to cater to different requirements of the issuer.